Well, let's move on to an aspect of financial planning that often gets underestimated and sometimes completely neglected. Debt is something that often, as advisors, we've kept a little lower on the priority list. We'll be exploring the entire comprehensive solution around debt for the borrower and for the lender. So here's presenting our personal debt and credit advisory experts. Give it up for Bhavin Patel, the CEO and co-founder of Vatas Platforms and the LenDenClub. Next up, we have Ritesh Srivastava, founder and CEO of Freed. Rishav Mehta is the founder and CEO of GrayQuest. Jeet Marwadi, MD and founder of One Finance. And moderating this discussion is Sumit Lakhutia, senior news editor, Times Influence and Times Network. Over to you, Sumit.
So we start off the panel. See, I was talking to Jeet before the session and he had a very valid point. He said, Sumit, जब financial planning की बात होती है, चलो equities की बात होती है, mutual funds की होती है, real estate की होती है, debt की होती है, but from a fixed income point of view, personal debt, credit, उसके बारे में बहुत कम बात होती है. That's why we're doing this today. Ritesh, I want to start with you on this point because एक चीज़ मैं जानना चाहूँगा, one important number. And this we, I'm sure, see on daily basis. आप mobile phone खरीदने चले जाइए, car तो ठीक है, fridge खरीदने चले जाइए. You will get those on BNPL, no cost EMI, etc. The household debt is around 42.1% of GDP as per December 2024, and it is rising. That we can clearly see. So, what are some important, common debt stress points that you are able to identify that people have to keep an eye on to ensure that debt doesn't cross that line? Little bit of debt is considered to be good, but you can't let it overpower your finances. You can't let it go out of control. Ritesh, your thoughts on that?
I think more than the household debt, what is important is the debt servicing ratio of the individuals. Right? Because it eventually comes down to an individual, a borrower, and a household. Let's not forget debt is also a very sensitive topic for individuals. Now, while you may see a number of 42%, eventually will go to 45 and 47 and so on and so forth. And economists may say that we have a lot of room in terms of headroom in terms of what our household debt to GDP should be because we are under leveraged right now. One may think that, but the point of view that I want to present here is that it's not the household debt of 42% which is concerning. It is the ratio of unsecured and high interest rate debt that comprises, right, of your total household debt. Now, unfortunately, in India, what we have seen is that a good 25 to 30% of the overall household debt is in unsecured. Now, when I say unsecured, it is credit cards, personal loans, BNPL, consumer loans, right? And that eventually is impacting the debt servicing ratio of individuals, right? Taking their FOIR or a debt to income ratio to as high as 80, 90%, which leaves them very susceptible, vulnerable to any event in life happening which could throw them into delinquency.
As financial planners, I know we are having conversations with clients about inflation तो एक चीज़ है, but lifestyle inflation अलग है, उसमें medical inflation है, the educational inflation. How serious is this educational inflation? How much, in your conversations with people, what are the kind of conversations you're having about the need to, take loans and EMIs for education? And I'm not talking about university की, graduation के बाद, post-graduation, MBA, उसके लिए नहीं, just even school.
So some context, we run a payment platform that works with education institutions. That I think we have today 7,000 institutions, which is right from preschool, schools, colleges and universities across the spectrum, preschool, schools, international schools, IB schools, universities, we'll have IITs, BITS Pilani, all types of universities that use our platform, right? So we sort of have a ringside view of, what parents in India are spending to educate their children. And one of the payment options inside our payment platform we provide is a credit payment option where a parent can convert, let's say, their annual fee into monthly payments. And the adoption of that has just skyrocketed across all segments that we are speaking of. So what are some of the trends that we are noticing? See, all of you all know, right? The government inflation numbers, the official inflation numbers are always around 3-4%. However, the way they calculate inflation and the actual spending that most of us in this room or our clients would be doing is a little different. So education inflation is one category that we emphasize and we speak about and we see. So just some context, a university like BITS Pilani, very famous, one of the most sought after private universities in the country. Their course fee in 2005 was 2.5 lakhs. This somewhere around now, it'll cost about 25 to 26 lakhs, for that same degree. You extrapolate that, so 2005, 2025, you extrapolate that to 2045, that's going to almost 1.3 to 1.6 crores, right? Now, that is significant. When you are thinking of, saving for your children's education, that inflation, just because it's compounding continuously at 7 to 10%, it just ends up becoming a very large wallet share of a family, right? There is one other nuance that I want to emphasize here that's also a very interesting trend. Specifically in schools. Because we work with a wide spectrum of schools, right? We see schools that are across the budget in terms of private schools that are across the budget. A very interesting consumer trend that we are actually seeing is parents are stretching themselves but trying to, enroll their kids to schools that are more expensive, right? And the schools that are slightly more budget are actually, have surplus capacity and, they're not finding enough parents to enroll. And that's a very interesting nuance, right? Because the common wisdom that we all feel is that fees is rising. However, the subtle underlying shift that we are noticing is the consumer is choosing to, they have 3 schools, one is at 50, one is at 1 lakh 50, one is at 5 lakhs. And, the push is to go to that school where the fees is 5 lakh. So that is again making it, a very, very significant expense. So one data, that last point from my end is average Indian family, at least on our platform, is spending 13% of their annual income on one kid's fee. So see, in the income tax law, there's a provision that if you take an education loan, you or for your family member, let's say for your child, and any interest that you pay towards that education loan is you can deduct that, it's fully tax deductible. And a very interesting point there is no cap on how much you can deduct. So what we are starting to see is many families who, when let's say their kids are going overseas, an undergrad degree maybe would cost 30, 35, 40 lakhs a year, right? Instead of paying it out of pocket, they're intentionally taking a credit from let's say a bank, and banks are willing to underwrite large ticket loans based on the credit worthiness of the customer. Let's say they are getting it at 8.5%, 9% if it's secured. If you can claim the full interest tax benefit on that, on the interest, effectively your cost of credit is coming down to 6 or 5 to 6%. Right? Because you're able to get that tax benefit out of it. So that is an angle that, so now let's say effectively your cost of credit has become 5 or 6% on a notional basis because you're getting that income tax benefit. So that is something that we are starting to see some families exercise it, but it's not as widespread. The phenomena is not as widespread as most people here would not know of this. But this provision, as I understand, has always been there and it continues to be there even now.
Bhavin, LenDenClub, interesting point on P2P lending. Just wanted to get your thoughts on how are you seeing P2P lending kind of integrating with traditional financial services. And I'll come to Jeet also with this. What I mean by that is that usually हम सोचते हैं कि where can I invest my money? I'll get returns. I'll put it in equity. I'll put it in debt, mutual funds, gold, etc., etc. But you are providing an avenue where lending my money to someone and getting some interest. What are you seeing in that space?
Evolving in very, very right track. So now the regulatory clarity is already in place in last year. P2P lending industry has been benchmarked with the regulator to service weaker as well as entry-level businesses, right? And that's one of the prima focus of RBI as well as the finance ministry for the financial inclusion. Now, these are the borrower segment where no traditional institutions are able to get into, and there is a technical reason behind it. One, ticket size is very small, so you have to use superb technology to service these customers. Second is the ROI will be little higher because the per ticket size loan amount is smaller. So you have to earn little bit higher per unit size, which is not falling into right criteria for bank and NBFC. So considering all the reasons, cost of the origination, cost of servicing, managing the portfolio, and higher ROI of the borrower, all these things fall into P2P lending's criteria. So for example, you can start lending with 500 rupees also. But again, if you give it to only one borrower and that borrower defaults, you may lose money. But if you are a smart person, you are putting few lakh rupees divided into few thousand borrowers, you can leverage it like anything, and at a portfolio level, it will add up couple of percentage of higher returns at whole portfolio. So it can be a good instrument for partners to pitch to their investors as well. They can add up, they can start with small amount. Once they experience, possibly that can be extended at a much larger level.
So one more angle of diversification of someone's portfolio in a way of a person. Jeet, you know, how are you seeing how advisors can help their clients navigate this the India's credit space? The role of advisors in this to guide clients and to bring out certain nuances of P2P lending, of how to manage your debt. What's your thoughts on that? What are you seeing?
I think, you know, the core value proposition of a lender has to be fair lending, and a core value proposition of a borrower has to be responsible borrowing. And, you know, as a country, we often talk about demographic dividend. We often talk about, you know, 29 is the median age of our population. So tremendous opportunity there, but then at the same time, without the right sort of guardrails, without the right sort of education, without the right sort of suitability of credit, right, for the individual, it's something that can be extremely risky for the individual. It impacts their families as well. So coming from the advisor's perspective, the reason why you know, we are big proponents at One Finance of holistic financial planning is that our advisors are focused on advising on assets and liabilities based on a scientific understanding of the individual. When I say scientific, I mean the psychological sort of personality towards the, for the individual towards their finances, their life stage. So when I say life stage, right, I mean, most of us in 30s are in the build phase of our careers. So we are really sort of now clear that this is the profession that we've chosen, this is the industry. I need to commit the next 10 years to this industry to really make a mark, to have, you know, my skill set really earn the benefits that I've put in so much time and energy in. So the point is, once you understand yourself, so we look for clarity for the individual through these practices, right? So life stage, money sign, which is the financial personality, profession is another element here as well. You know, because the profession that you're a part of plays a big role in your journey in terms of your income trajectory, your sort of stability of that sector. So an advisor really has the bird's eye view and the emotional connect of the customer. They're able to say, hey, look, you know, person, hey, Ashish, you know, you've grown a lot in your income and you want to upgrade your lifestyle because you think that, you know, your income has grown so tremendously over the last couple of years. So you want to take bigger bets on yourself, right? So you want to stretch yourself. Now, it sounds great because on your past capability, you are sort of placing your bets on your future, but it's not always certain, right? So, which is why, you know, responsible borrowing is something that advisors help our customers and the financial planning ecosystem, make them aware that, hey, there is a reason, the same way that we manage our assets, right? Where you have, say, when you ask someone what do you want to invest in, you ask them what's the investment horizon and what's the purpose. Then I can allocate the right asset class for you, and you can allocate the right percentage of your savings towards that goal. The same way, I think it applies to debt as well. What is the reason you need this debt? How do you intend to use it? And what's your capability of paying it back? Now, what we are seeing is, 30% of household debt is in non-home loan category, which is growing, and it's the third largest already across the globe. So after Germany and UK, India happens to be the third largest in this space. So, it's an alarming figure. We understand that we have a great sort of demographic dividend in this country, but at the same time, we also see that there is stress at individual levels, and that's where the ecosystem really needs to come together and say, hey, how do we help people, guide people to responsible borrowing, and eventually that will benefit the entire ecosystem. But again, it's you have to be involved on it, because the convenience of credit is difficult to sort of say no to.
Please, round of applause for our experts and for yourselves as well for asking some great questions. Mubina, back to you. Thank you.